What's going on, everybody, and welcome back to the channel. It's been a long time, but I had to go away for personal reasons, but I've had a lot of time to learn, so let me just go ahead and jump right into it and share with you guys what I think is going on with the market. I do want to share this info with you. I'm working on a new website called Chartbark, where you'll be able to go and basically see what I'm posting, what I'm going to be talking about in my videos. I'm going to do it this way so you have kind of like a clear thing of what's going on every time I post a video. So what is the current situation? As you can see, I wrote this here on September 11th. So at the moment, NASDAQ is getting a bounce off a confluence of support being the 10-week simple moving average, as well as the 20 and 50 SMAs right there in the daily time frame. As we can see in figure 1, which is right here, the market bounced and formed a higher low to end the week in the 15-minute time frame. So as you can see, this is the cash index of NASDAQ. As you can see, the blue line is the 10-week moving average here. I believe this is a 15-minute chart, yes. So as you can see, on 15 minutes, we gapped below, we opened below, got back above it, and then found a little bit of support there right at the end of the day. So yeah, we got back above it here, and then now we're getting back above the 10-week again. So this is a very important level to watch. So next up, we have just something I just wanted to share with you guys, and I found was pretty interesting. So I went ahead and put a MACD, which is a momentum indicator, basically on a on the PCCE equity ratio. So what is PCCE? It is the put to call ratio for equities. It's made by the CBOE, and as you can see, this is what it is. But right here, it's kind of difficult to read. As you can see, we can see a few key points. Like this is the bottom. This was the bottom when we had the, I think maybe an all-time high in the PCC or something in amount of puts. But as you can see, we also recently had a little move up, and on the momentum oscillator here. Since the beginning of 2023, spikes in put ratios have led to bullish momentum. We just got another one with this past sell-off as we set up divergences across time frames surrounding support. So as you can see, we just had our last peak right there and our last little bottom. The last time this happened that we had a little peak like that was the previous bottom down here before what I believe was kind of like wave 3, I think. And then once again, when we had the huge amount of puts come in at the very bottom right there, well, it wasn't the bottom, but on NASDAQ, it kind of was. So yeah, so as you can see, we have an interesting correlation, and something that happened right here at lower levels were even deeper extremes, and we had another peak develop. A lot of people are calling for a big crash to happen right now. This is why I'm showing you that that might not be the case, and that I think that we could go to all-time highs here on the market. The 4-hour chart of futures, which is almost identical to the cash index 1-hour chart, shows us a massive bullish divergence that has formed on the MACD between the lows from August 26th and now. Bulls are looking for that MACD line to cross into positive territory here. As you can see, we've rallied up to the 50 SMA in the 4-hour time frame. So let's just go ahead and take a look. Has that happened already here for US 100 in the 4-hour time frame? Let's go ahead to our 4-hour time frame. And we did come up to the center line here on the MACD, and then we formed a little, we had a little dip here, a little sell-off, and that happened. Now we're back above it, back above the 50. Are we back above the 50? No, we're actually currently trying to get back above the 50 here on the 4-hour time frame, which is basically the 50-period moving average in the hourly time frame of the cash index. That's something very important. So when you're looking at the 4-hour chart of futures, always keep in mind that it's very, very similar to the hourly chart. So again, it gives you an idea for what's going on in after hours if the market was open. Do you see what I'm saying? So this is why I look at both. I look at futures, and I look at the cash indexes. So yeah, so basically ever since we came up right here, this sell-off, as soon as I saw this, I was like, nah, this is fake. And I thought it would go up, and we did. And now why do I think this? Because the economic cycle usually, I think the only time this didn't happen was in 1927, but the economic cycle usually is an inverted yield curve, and then you get a stock market top. Now we got the inverted yield curve a long time ago, but the stock market peaked before the yield curve actually inverted. So as I'm saying, the only time that happened, I think, was in 29. Was it 29 or 27? Anyway, so yeah, so it was in whatever 1929, and when we had the huge crash, and then that led to the Great Depression. So I still do think that that is not what we're gonna get right here necessarily. So there is a higher probability that we get new highs here on the market. So keeping that in mind, as you can see here in Nasdaq, we had 1, 2, 3, 4. What it looks like 3, 4, 5 maybe. Maybe 4 is a little bit more dragged out with a ABC, ABC, and then ABC again for a flat correction here, where we go a little bit lower than this level before continuing the move up. If we actually continue going up from right here, that's very bullish. So yeah, we're just looking to see what happens surrounding these levels of support here. But as you can see, we're dancing around the 78.6% retracement. If we get above this, I mean, we're going to break all-time highs. Like I'm telling you, I've seen this happen enough times where you break the 78.6, you usually break this level, whether it's a little double top here and you stall right above it, or you just blast through it, retest it, keep going, whatever. Usually once you start dancing above the 78.6 this much, and you don't, like, as I'm saying, this is a very critical moment right here. If we don't start selling off pretty soon here, or actually if we don't sell off of this zone, if we continue going up and we break through these highs here, retest and keep going, yeah, this thing could go very high. In my opinion, where could it go? I mean, I even think like 21,000 wouldn't be that crazy here if we really go back up to the big trend line of resistance. I think I might have it on this chart. Yes, this one right here. Is it this one? I don't know. Maybe the trend lines moved on me here. You know, the trend lines move sometimes. Yeah, look at this. So as you can see, it's messed up because I need to put logarithmic. All right, now we should be good. Yeah, so this trend line that's sitting right above us, right here, if we go up and tag this, you can see that would lead us to about 21 to 22,000. That would give us a huge move up, which I believe could be the straw that breaks the camel back here, the camel's back, and then we start a huge crash here, going new high, new low, bounce off of this bottom trend line, come back up to the 200 moving average, stall at it, and then have the big bear market crash. So I think there is still a big possibility that we continue moving up here. As you can see, I have the weekly chart of Nasdaq right here, bouncing off of the 10-week moving average. The blue line is the, what is it? I think it's the 50-day moving average here. So yeah, as you can see, S&P, we're currently doing the same thing. S&P is sitting a little bit under its 10-week moving average, but Nasdaq is holding strongly. The Russell is getting a bounce off its 200-day moving average. Like I'm telling you, if we can, this is a very important area, but if we can get a higher low, higher high, watch out for new all-time highs. So next up, what do we have here? The reason why I'm currently bullish is one, options. We'll get into those later, but they don't spell sell just yet. The monthly chart, figure 5, shows us the possible bearish divergence that could be setting up on the monthly chart. For that to happen, NDQ has to move to a new high above the 2022 peak. 3, the fibs. NDQ has already danced around the 78.6 fib a lot. In my experience, this level is the do or die level for price. And if it starts disrespecting it like it has done recently, it usually means that that level of resistance is but a stone in the market's path. So as you can see here, we've been dancing around the 78.6, coming above it, as I just showed you on the chart. So usually when this happens to me, you know, if we start getting back above it here, look out, man, look out. It could get crazy, especially if we start breaking past this level. We'll get short squeeze, I'm telling you. 20,000 wouldn't be that crazy to me if we can stay within this channel. I don't know, like, you know, maybe April next year or something. We will see. All right, so next up we have this little thing. So figure 5 is the NDQ monthly chart here, showing us the bearish divergence that could be developing on the monthly time frame once again. Like if we come up to a new high, form a bearish divergence here on the monthly time frame, and then crash, like that could lead to the big crash that a lot of people have been waiting for. Michael Burry just shorted the market with everything he had, basically. Okay, maybe not, probably not, definitely not. But I don't think that's necessarily going to happen right now. I don't believe it's as simple as peak, lower, high. I think right here we trap all of the bears in. You know, we let all of the YouTubers and hype people be right once again a little bit longer here and say, oh, it's just going to keep going up before it crashes back down. So if the market rallies again soon above the 78.6 fib, that means all-time highs in my opinion. Strap your seatbelts because the move that might take place could be huge with a massive short squeeze in play. Always stay ready for anything, and the main trend line of resistance is the red trend line above in the monthly time frame. If we reach that level, it will be about a 100% rally from the October 2022 bottom, which is the level down here. And if we reach it with a massive divergence on the monthly time frame, I'm selling. Not financial advice, I'm just telling you what I would do. All right, so next up we have a little bit of something different here. We have yield. So this is the inverted yield curve here, the 2-year versus the 10. So in figure 6, we have the inverted yield curve. It has never been wrong in history at predicting a recession. So we know one is coming. All right, that's the first thing. It's going to be a recession, guys. What we have today is one of the worst yield curve inversion cases in history, and it might be foreshadowing a bad recession on the horizon. Nevertheless, usually the economic cycle is, as I said, inflation followed by the inverted yield curve, and finally a stock market top. I think the only time this didn't happen, as I said, was in 1927, and we all know what happened after that. So what does this tell us? It adds another point to the bull case for new highs this year going into 2024. If we peak here and turn lower, the only reference case traders and investors would be 1927. Very, very dangerous stuff. So this is just the inverted yield curve here showing us that currently we are under the moving averages here. But if we get another little move up, the market could continue moving up. If we continue, going down here, that might not be very good for the market. But, we still could go up for a little bit. Last but not least is the options distribution. Now, figure 7 and 8 show the next two big option expirations. And what we can notice is that puts still largely outweigh calls at this point. The herd turned bearish when the market bottomed in October, as there was the biggest amount of puts purchased in history. Since then, the market has been in short squeeze after short squeeze. Is all this enough to say that we surely haven't peaked yet? Unfortunately, no. We must watch price action. But I am personally bullish on the short term here, and I believe that markets are going to make a new high, as they did in Europe already. Europe has already made new highs, a long time ago. If you look at the French markets, it's just been a juggernaut right here, making new highs a few months ago. So that is when everyone will turn bullish, and the options distribution will look similar, with the green peaks replacing the red ones. So as you can see here, this is the next two big option expirations. So September 22nd and October 20th. And as you can see, there's still like huge amounts of puts. It's just put city, and I think these aren't going to go away until we, start breaking that new all-time high and moving up. And if we hit that 20,000, like everyone's going to be calling for 30,000, 40,000 NASDAQ, and that's when, I think it's going to crash all the way back down. So yeah, so the options distribution here showing us once again that puts outweigh calls. I think max pain it isn't that far, maybe like 5 to 10 points higher or lower on the S&P. I don't remember exactly, but it's nothing too crazy. I think that we could still continue going up until we start getting some massive calls coming in here. So yeah, so that's all it is going to be for today, guys. Thank you for watching this video. I'm sorry I didn't post for a long time, as I said, but I've had a lot of time to learn, and I've had a lot of stuff going on in my own personal life. So hopefully we'll be back to it now, and I'll see you guys in the next one. Peace.